Are you one of the 9 million Floridians living in a community managed by a property manager or HOA? If you've ever wondered what your rights are as a resident or what your role is as a volunteer board member, you've come to the right place. Welcome to the Condo Coaches, your resource for when your gated community starts to feel more like you're stuck behind bars, or when that guy next door decides that a hot pink Chevy on cinder blocks really sets the tone for the neighborhood. The Condo Coaches is brought to you by lmfunding.com. Find the Condo Coaches online at thecondocoaches.com. And now your host, Johnny Torres.
Thank you so very much for listening from whenever, wherever you may be listening. And for those of you watching us live on Facebook, hello, how you doing? Facebook.com/The Condo Coaches if you want to watch our show live. Again, that's Facebook.com/The Condo Coaches. And again, you can also visit us not only on Facebook, but you can watch the show on YouTube. Also, you can watch the show on our website, thecondocoaches.com, where you can also download a free download. It's the top 10 things you know if you are a condominium or homeowners association board member. And then we have a new premium download, and that's collecting delinquent HOA fees. And so again, if you are a board member, those are absolutely vital that you get these documents, and we're running off, hundreds if not thousands probably, Dean, right?
We're almost at 1,500 of the first booklet out in hard copy.
Nice.
And then we've got a bunch of downloads too.
Sure, tons of downloads. And again, you can download that right now at thecondocoaches.com, and you'll start getting our second premium download as well. So make sure you sign up at thecondocoaches.com. And as we always like to do, we like to start off the show with comments and feedback. We, of course, got a nice comment on our Facebook page recently from Linda, listening, I think somewhere down in South Florida. But she was saying that she was out for a walk, and she happened to have her headphones on, listening to the radio. She had caught the show for the very first time, and she said everyone that lives in a condo should be listening to our show. So thank you so much, Linda. We hope you're listening again today. And Dean Akers with us as always, head coach Dean Akers. Give us a little bit, give us a primer on what we're going to be talking about today, because you're going to share a story that's very closely related to today's show topic.
Well, we're getting tons of inquiries, and excuse me, we're helping a lot of folks, Johnny, as you know. The past couple weeks, though, we're at the year end for associations and stuff, and I've had some very interesting calls and conversations, and they kind of go like this. We're hurting as an association. We don't have cash. I've even had one tell me, I'm not sure if somebody's not embezzling. And that's a pretty big comment.
That's a big accusation. That you don't say something like that lightly.
So we had a condo coach go in and did some reviews, and we've got Percy joining us again today, who's going, our real accounting coach and everything. But what was interesting is when we went in and did this review, is that in fact it was not embezzlement or anything. The books were correct. It's just they did not understand how to read the income statement and the balance sheet and what that meant for their own association's cash flows. Gotcha. They saw cash flows drop, right, so they thought somebody was taking it out of the bank.
They didn't know where the money was going.
No, but it was going right where it was on the sheet.
Yeah, and that's a perfect lead-in to today's topic. It's understanding your community's finances. Again, if you want to participate, you can call us. You can call the Condo Coaches Network at 813-331-5415, 813-331-5415. You can also email us your questions and comments, help@thecondocoaches.com. That's help@thecondocoaches.com. And, of course, always our website, thecondocoaches.com. With us, joining us now for the second time on our show. So welcome back, Mr. Percy Legendre. And am I pronouncing the last name right? I know it's Cajun, and
yes, sir.
So I'm trying to get as close to it as I can. But Percy joining us again, and Mr. Legendre has over 25 years accounting, tax, and consulting experience. In 2001, Mr. Legendre was named managing partner at Bashore & Legendre, LLP CPAs, and he frequently conducts seminars and workshops on various tax and accounting-related issues. Mr. Legendre is a member of the American Institute of Certified Public Accountants, Florida Institute of Certified Public Accountants, FICPA section for Common Interest Realty Associations, and outgoing, right, or former president and board member of the Suncoast chapter of the Community Associations Institute, which is why you're such a perfect fit for our show. So thank you, Percy, for being with us again.
My pleasure. Thank you.
And so a little bit to what Dean was just saying in that example that he was giving us. Do you find that that's pretty common where people seem to resort to somebody's got to be stealing money as their first reaction to when maybe the numbers don't look the way they should?
Yeah, we see it all the time. If someone's stealing money, sometimes they say we're stealing money, being the CPA.
They actually, one of the groups thought that.
Yeah. We work for the management company. No, we're not. We don't work for we're independent. We work for the board. But normally we're hired through the management company. So you do see it lots of times. And to be honest with you, I've seen a lot of fraud in my lifetime. 2008, when the market went down, I saw $1.8 million, $2.2 million getting stolen.
Wow.
All the way up from $200 to $2,500.
Well,
the spectrum.
And it's when times get desperate, right? When times get tough, that's when you got to watch your finances the closest and make sure that every dollar is accounted for.
And, lots of times, you find out the person that's doing it, been there 15 years, and not necessarily in the HOA condo, just in industry in general. Oh, they've been my bookkeeper for 20 years. I trusted them like my daughter, my sister, my wife, my husband. I go, when you hire someone, you never go, I think that person's going to steal from me. I'm going to hire them.
Yeah.
It's always they're not going to steal from me. So you want to make sure you look at your own bank statements, look at the checks front and back, and you'll catch a lot of it right then and there. But you got to pay attention yourself.
And you have to build a certain level of trust to bring somebody in to manage those finances for you. So, of course, once you've built that level of trust, your guard comes down and you kind of take a back seat. But again, I mean, regardless of who it is managing those finances, I would think that you have to stay on top of those things, like you said, and trust but verify.
Yeah, and even in 2008, I'm not going to necessarily say it's bad people stealing, and it sounds kind of odd, but husband and wife, and someone loses their job, or someone gets sick, or some kind of disease or whatever. Things change, and desperate times, desperate things. Hey, I got to feed my family.
Sure.
So we've seen a lot of things throughout the years.
Now, typically, what do you see? One of the things that we talk about constantly is miscommunication among the board of directors between the residents and the property management company. Do you find that to be the case also on your end, working on the CPA side, in terms of why people sometimes get up in arms with financial statements?
It's communication. Every time you want to argue something, I say, get the facts. The facts are so-and-so said. That's not a fact, so-and-so said. So you got to get all the facts. Normally when you sit down and lay it out and go through it, like Dean just said, we had our committee go in there, we reviewed it, and we explained to them where their money came in and out. So once you sit down and go over it all together, too many times in today's environment, we're trying to solve problems through email. Email can be read different ways, can be taken different ways, context can be different ways.
Yeah.
Lots of times when you're in the room going over it, it makes it a lot clearer.
So phone calls, person-to-person meeting, making sure that you everybody's on the same page.
Yes, sir.
Yeah, and so let's start to delve in. We've got a few minutes left before we got to take a break, but let's start to delve in a little bit to today's topic because, of course, we're leading up to tax season, the busy season for you, and of course, and that applies to a lot of these community associations as well, and so. One of the things, or actually what we're going to be talking about today, of course, is budgets, financial statements, reporting requirements. What are some preparation things that these boards can do to start to go down that road of analyzing their budgets, making sure that they understand their financial statements, and also educating themselves on what their reporting requirements are?
Well, it first starts if you're an HOA or a condo board of director, you have to go to a meeting or you have to sign like a little affidavit saying you read your documents, you understand them, you read the law, you understand the law. Just going to those meetings, and like we said, CAI is a great resource. This show here, the Condo Coaches, is a great resource. So you got to get on the ground floor to kind of learn what you're doing, get the basics, And there's a lot of education out there. You got to just find the outlets to do that and educate yourself.
An observation now that I've found a lot, coming new in the industry and hadn't been a former adjunct CEO where I went in and did workouts of companies, and I was doing pretty large companies, and most of the times I went in, the senior management of large companies had a challenge reading their own income statement, correlation to balance sheet, and statement of cash flows.
Wow.
Now, these are companies that are doing 25, 30 million.
Sure.
Picture a condominium association that's doing 1.2, 1.5 million, 800,000, and a board of volunteers that have not been trained. Here's the thing that I've challenged these guys, not Percy, but when I go in, they all say, oh, yeah. They all say they understand it.
Right.
And then I ask them a couple key questions. The minute I ask them a couple quick key questions on budget variance or what happened to this in this period to this period, all I get is yabba dabba do, which means
get deer in the headlights.
Well, because it's embarrassing. And what happens is when you have professionals like Percy or you bring a condo coach in, you want to be as transparent as you can.
Sure.
And there's nothing embarrassing about not knowing. What is embarrassing is to not know and pretend you know and then have it bite you. Is that a fair observation?
Sir. Yep, yes, Dean.
And that's what I'm running into. So
yeah. And Percy, would you say that there's a majority of people who have some financial background typically when they serve as treasurers on these boards, or is it the opposite?
It's 50-50. You got the 50. CPA who's been here forever. The CPA is always the treasurer. Then you have people who are not involved. I'll get involved. I just show up at a meeting and I'm the treasurer. So it's 50-50.
All right. Well, today's topic, again, understanding your community's finances. If you want to participate, again, call us 813-331-5415, 813-331-5415. Hit us up, comments, questions there at facebook.com/the Condo Coaches. You can also email us, help@thecondocoaches.com. That's help@thecondocoaches.com. Again, it's a very important topic. Not always the funnest thing to talk about, but, incredibly necessary, especially as we get closer to tax season. Get the premium downloads now at thecondocoaches.com. That's thecondocoaches.com. With us, financial coach, CPA, Percy Legendre. We'll be right back.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
Okay, forest animals, today is a new day. Kids are coming to the forest, and it's up to us to make their visit a good one. Sparrow.
Yes?
Have you practiced the most popular bird songs for the year?
Of course.
Catchy. I like it. Okay, River.
Dude,
How's the temperature?
it's a refreshing 52 degrees, man. Perfect for a little riverside shoeless relaxation.
Ah, good. Owl, you here? Course. Who's asking? I am. Look, you know the drill. Sleep during the day, scare the kids at night. Perfect. I love my job. Oak Tree?
What's up?
Still in the same place I left you last year. That's what I like. Consistency.
Well, it's not like I'm going anywhere for the next couple hundred years.
I know. I love it. Turtle. Turtle.
He's not here yet, man.
He's late every morning. You'd think he would have learned by now to leave the night before our meetings. Okay. Squirrel. Has anybody seen Mr. Squirrel?
The forest has been preparing just for you. Visit a forest near you today. To learn more about cool things to do in the forest, visit discovertheforest.org. Brought to you by the U.S. Forest Service and the Ad Council.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Thank you once again for listening to the Condo Coaches radio show. Thank you, Tampa Bay. Thank you, Orlando and Central Florida. And thank you, South Florida, for listening. And, of course, thank you for those watching on Facebook.com/the Condo Coaches. Our topic today, understanding your community's finances, an incredibly important topic. And, again, I think it may be late January, but it's absolutely a timely topic as we get closer to tax season. We, of course, talked a little bit about how to prepare for the financial responsibilities. And so let's kind of start where all this stems from, which is budgets. When we're talking about budgets and a board of directors getting together to discuss the budget, we, of course, have had a whole slate of condo coaches who have come to talk about all the different things that go into the budget, right? Security and insurance and you name it, and amenities and that sort of thing. So tell us, Percy, where do you typically see the mistakes in terms of budgeting? I think, what are some of the things that people need to be vigilant on when constructing their budgets for the following year?
I'm going to kind of hit the most key critical issue we see. Although our topic today is financial statements, the financial statements are historical data that shows kind of what we did. The budget kind of shows what we did, but also what do we anticipate for the following years? What do you expect our results to be? You can sit there and do zero-based budgeting. We're going to collect $100,000. We're going to spend the $100,000. We end up with zero. It's great. That's not real life.
Right. Not reality.
That's a fairy tale.
Real life is some people don't pay their maintenance fees. So if we're supposed to collect $100,000 because we have $100,000 in expenses, we only collect $80,000, we're $20,000 short. So you want to make sure you budget for that shortfall. Also, they got companies like LM Funding who go out and look at your receivables, and they'll fund those receivables to pay some of those items to keep you from, having that bad debt so bad. So you got to make sure you budget your bad debt number. It really wasn't an issue till 2008, and in 2008, it was 35% of some people's budgets.
Wow.
Especially in the new HOAs built in Riverview and 54 that just kind of sprung up overnight, and the economy, boom, all of a sudden. So,
well, and on that note, because again, you're talking about the reality being that not everybody's going to be paying on time. And so that's actually why we created this second booklet for our premium downloads, which is collecting delinquent COA and HOA fees. And again, for those of you listening, for those of you watching, you can download that at thecondocoaches.com. That's thecondocoaches.com. If you happen to catch the Condo Coaches at an upcoming trade show, they're going to have hard copies giving out. We've already given out over 1,500 copies of our first booklet, the top 10 things you need to know as an HOA or COA board member. But this new one, I think, is going to be equally as popular and important, and it's called Collecting Delinquent COA and HOA Fees. Reach out to us or download it today at thecondocoaches.com. Thank you, Percy. Sorry, I wanted to make sure that we got that across because, again, I think it fits very nicely into our topic in terms of budgeting. And like you said, the reality is that not everybody is going to be paying on time. And while zero-based budgeting sounds amazing, it's rarely the case, right?
Yes, and the only other issue with that is where did you start? If you're in the hole $30,000 and you do zero-based budgeting and come out with zero, you're still 30 in the hole.
Right.
If you have 100,000 ahead, well, maybe you can do some things because you're ahead. So you got to look at what your equity is, what your fund balance is when you start.
Well, and we've talked often as well as assessments, and how they're kind of piling on assessments because they haven't been collecting year after year over potential damages or repairs or maintenance that needs to be done. How do you recommend that a board address those things, or at least take those into accountability? I mean, one of the things we talk about all the time is having a condo coach come out and do an assessment into those matters. What's going to need repair? What's going to need more maintenance? How do you recommend or how do you consult them to budget for those kind of things?
Yeah, you see a lot of budgets, insurance, you're going to get your insurance bill. Your management fee, you got a contract for that. The repairs and maintenance are their odd item. That's why we strongly recommend an outside reserve independent study, how long the roof's going to last, how long the building's going to last before it gets painted. So you need to look at those outside industry consultants to make sure you have adequate cost and long-term planning for those items.
Well, one of the other things that we always talk about is assessments, and we, as the Condo Coaches, would love to come out and help you with a financial assessment. Percy is part of our Condo Coaches network, so if you particularly like a little Cajun consulting, then we'd be happy to send Percy out and do an assessment for you of your community's finances.
Here's another observation. Again, I'm drawing on some previous adjunct CEO stuff. Several boards I've gone to, and I kind of recommend this. I don't know how Percy, what his thoughts are on this, but when there's a budget variance, which I've found in some of these associations, I've requested the management company to provide me a detailed transactional GL, detailed transactions for that general ledger number. And the reason is that helps the people know, $288 went to Billy Bob. $1,500 of it went to Office Depot. And if there's a big variance, even in budgeting, I've downloaded the full GLs and had the boards just review them. That way every transaction that went in there. And it really was important in one because they thought the management company was gouging them. And when I went through and took the management company contract and tied it back to the detail transactions, management company doing exactly what was in the contract.
Yeah, that's excellent. Well, and they may be paying for things they're not even aware of.
Well, yeah, but it back to Percy hit the nail on the head. What was you and I are old enough to remember Dragnet.
Yep.
Just the facts, ma'am. Yep. Just the facts. And what happens is take the emotion out of it. If you need a condo coach to come in and help orchestrate how to ask the question, all of us will help. If you can do it yourself and you think there's a problem, just ask for the detailed transactions. Every management company can shoot that to you easily within 24 hours because it's a matter of hitting a couple things and bam.
Okay. So again, if you need help with that, we'll help you with a financial assessment. We'll help you kind of take a look and make sure that everything's adding up with your finances for your community. If you sit on the board of directors, you can call us and we'll help you out. You can do that at 813-331-5415, 813-331-5415. Email is great too, because we know everybody's out there working. You got your own lives to worry about. And so sometimes email is a great way to communicate with us as well. help@thecondocoaches.com. That's help@thecondocoaches.com. And of course, we've got a number of contact forms on our website that you can get a hold of us through. It's thecondocoaches.com is our website, thecondocoaches.com. We're talking budgets. We're talking how to plan for those budgets and how to analyze those budgets here in this segment. And of course, our topic for today, understanding your community's finances. Our guest coach is returning coach Percy Legendre. Tell us in terms of budgets. You mentioned obviously zero-based budgeting. You have to be very careful because it's not always adding up. Taking into consideration some of the past, debts and that sort of thing. What other common mistakes do you see when it comes to budgeting? And certainly, does the age of the community have a factor in that?
Obviously, on the age, a lot of the stuff on the budget actually is just technical stuff.
Okay.
Florida statutes for a condominium is very detailed on what a budget should have and what line items. One item you see a lot is you see 2017 budget. You cannot have that. It has to have the beginning and the ending period. Budget, January 1st, 2017 through December 31st, 2017.
Okay.
Just that key thing can cost an association $2,500 fine.
Wow.
For 3 years, up to $7,500 just for having the wrong title.
Just for not having those dates filled out correctly.
Beginning, ending period, yes.
Right.
That was a $7,500 coaching tip.
That's
I'm not going to forget that one.
That's a good one.
5 items I saw back in 1992. 3 of the most common 5 I saw just 3 years ago. Someone, management company, got in trouble for not doing it right. Also in the reserve study.
And so there's no getting out of that. I mean, that's a $2,500 fine for the next 3 years.
Well, they go back 3 years.
Oh, they go back 3 years.
Depends if it's developer controlled or unit owner controlled. If
Okay.
it's unit owner controlled, they'll slap you on the wrist. But if you do it again, they will fine you. On a developer controlled one, they will fine them the first time out. Is my experience with that. And then the other 2 common ones we see is on the reserve study, you have to have the estimated balance for each category. People put estimated balance 12/31/2016. It has to be at the beginning of the period, 1/1/2017. Just a date.
Wow.
Doesn't change the calculation. Crazy.
Oh, wow. Well, and again, that's coming out of your pocketbooks. I mean, that's, there's nobody footing the bill there other than the residents themselves. And so those dates incredibly important. And again, Dean, I mean, we've got condo coaches that are ready, willing, and able to help here when it comes to a community's finances. Give us a little bit more of an idea of exactly what some of that process would be if somebody wants to come in strictly for a financial assessment.
If they reach out to us, we have a form that we send out, and we ask for some documentations. We ask for their condo deck, their budget, and their audit, and their beginning year or the end of the previous year balance sheet, income statement, and through the most current period closed. And then we have our coaches look at it for a kind of an assessment.
All right, excellent. So again, if you'd like a financial assessment for your community's board of directors, please reach out to us at thecondocoaches.com, thecondocoaches.com, our website, our phone number, 813-331-5415. Someone from the Condo Coaches Network will get a hold of you, or email us help@thecondocoaches.com. That's help@thecondocoaches.com. Segment 3, financial statements, coming up. We'll be back.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
Hey, America. We need to have a little talk. We've got more food in our country than we know what to do with. Food at the grocery store and food in the vending machines, fast food, health food, and seafood. We've got so much food that anything people don't buy, we just throw out. Yet 17 million kids in America struggle with hunger. That ain't right. Luckily, the Feeding America nationwide network of food banks has volunteers gathering excess food and getting it to hungry kids. They're kind of like food angels. Yeah, I made that up. It's kind of catchy. Hello, people. This isn't rocket science. We could solve hunger today. To start, become a food angel yourself by supporting Feeding America and your local food bank at feedingamerica.org. That's a website, duh. We can't do it without your help. Brought to you by Feeding America and the Ad Council.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Thank you so much for those of you watching online at facebook.com/thecondocoaches, facebook.com/thecondocoaches if you want to watch our show live. But of course, you can catch it anywhere. You can catch it on YouTube later on today. You can also catch it on iTunes, which that's my favorite version. I unfortunately drive a lot. And for instance, over the past week, both 2 weeks ago and this past weekend, I was driving back and forth from Orlando a few times. And so I podcast because I absolutely love it. And you don't have to deal with losing radio stations, as you drive between one city and another. So you can download the podcast version of the Condo Coaches on iTunes. And I absolutely love that. If you are not on an Apple phone or an Apple device, you can also find us on SoundCloud. SoundCloud, incredibly popular. Also for podcasting. So just search for us, the Condo Coaches. We are talking understanding your community's finances is our topic today. We have, of course, our CPA coach, Percy Legendre, head coach, Dean Akers. And we, of course, have been bragging a little bit about these booklets that we give away on our website at thecondocoaches.com. People can sign up and we'll send it to them absolutely free. And these are high-res PDFs, so if they print these out, they're going to look great. Share them with their board members. We've got the first one, which is top 10 things you need to know if you're a board member for a COA or an HOA. Our second book is Collecting Delinquent Fees for HOAs and COAs. And we're talking about, how important this topic is. So we're going to develop a third booklet, and that's going to be understanding your community's finances. We're going to work with Percy Legendre here, who's our, again, in-house CPA condo coach, and give us a little bit more about what some people can expect in this booklet that we'll be working on.
Well, it's gonna be almost, I don't want to call it finance for dummies, but there is a book out like that.
Right.
But what it is, it's going to be the fundamentals of finance, and then it's going to be specific to community associations, because there's a little bit of nuances there. You don't have fixed assets, you have different things generally. So it'll be more tailored towards that. But the intent for it will be for a new board member to be able to get it and get real pointers, 10 key pointers to be able to understand their finances and elevate their expertise to run their associations.
Well, and even just from what we were talking about in the last segment, having information like this could save you thousands of dollars in fines.
Exactly.
And that's part of the reason why we do this. We want to make sure that you're making the right decisions, you're preparing adequately and appropriately and legally in terms of what you are responsible for when it comes to your community's finances. So again, make sure you visit thecondocoaches.com, sign up at thecondocoaches.com. You wanted to add something, Dean?
Yeah, one other thing is we have the online, which we download, and we're doing a lot of those. Mm-hmm. The quality of the booklet, anybody that wants the hard copy for their board members printed, because it's a real high quality booklet,
Yeah.
we'll be happy to mail those to them if they'll go and where it asks for information.
Yeah.
Just ask, hey, could you send me 5 of the quality copies to ... Braden in Florida, wherever,
Yeah.
to attention, whatever. And we'll send the high quality printed versions also.
Right. No, and that's incredibly important because not everybody likes reading on their computers
right.
or on their devices. And so if you go and reach out to us on our contact form there at thecondocoaches.com, we'll make sure that, Molly gets out some of these booklets.
Oh, absolutely.
We'll mail you the hard copies. They're actually beautiful to look at and they're easy to read.
Yeah.
And so we'll make sure that you get a copy of those if you reach out to us at thecondocoaches.com. Yes, Percy.
As far as the new booklet, Understanding Financial Statements for Board Members.
Yep.
How are you going to spell board? B-O-A-R-D or B-O-R-E-D? Board members.
Yeah.
We'll probably have both /
Well, and again, it's one of those topics, it's not fun to talk about, but it's incredibly important. Like you were just giving us the example of in the last segment. It could, save you thousands of dollars in fines, or it could cost you thousands of dollars in fines if you even, miss some information or just don't put it in the appropriate format.
Well, he's saying that tongue in cheek, but quite frankly, Percy, a number of the boards I've met with, the BORED, the board, is they're like, look, I didn't sign up to do finance. I'm a board member, and they don't understand the impacts and responsibilities. So some of them I've met with, and I think it's a defense mechanism. I don't think they're trying to be flippant about it, but they don't understand it, so they don't want to act like they should or couldn't.
And I would say that that's really, at its core, is the responsibility of the board of directors. Is it not the finances of the community? Is it not the financial well-being of the community?
I mean,
everything ties back to that, doesn't it?
Yes.
Yes.
All right. Okay. And so they all need to be equally educated as to how these budgets are done, how these financial statements are read. One of the things that, of course, we wanted to talk about in this segment was financial statements, because they are different from maybe your home finances, your personal finances. Give us some of the differences and things that they need to be looking out for when looking at a financial statement for a community.
Yeah. For an HOA condo, they're all required to have a balance sheet, income statement, cash flow statement, changes in fund balance, required footnotes. So they got a lot of different things, but you use accrual basis accounting. So like when you're doing your checkbook, you're using cash in, cash out, which a lot of people understand. And people don't understand the accrual basis. Accrual is when it's earned and expenses are when they're incurred. So if you owed money, like because you did tree trimming in December, but you don't pay it till January, that's a liability. You have to accrue that item. There's a lot of financial reporting requirements for HOAs and condos. If you have over 50 or more units in revenues between 150 and 300, you're required to do a compilation. 300 to 500 a review, and over $500,000 an audit. All different levels of services. You got to check your documents, though. Some HOA documents require an audit, while the state requires only a compilation. And you should consult with your attorney, but you should be doing the audit because of what your documents say. And also, if you do waive it, you can waive it 3 times for a condominium. The 4th year, you have to do it. And you have to do a cash receipts and disbursements with a lot of required disclosures. That's a common thing we see being done improperly. And that can get you a fine up to $15,000 if you don't do that cash receipt and disbursements properly. And I've seen that also.
Wow, that's incredible. And give us some of the reasons why that would be waived. Why would a community waive that?
I'm going to tell you like I start most of my meetings with my board members. Mm-hmm. I go, if you ever been arrested, raise your hand. Then I go, no, I didn't mean that. If you're ever arrested or a loved one, not your spouse, somebody you really love gets arrested, do you want the cheapest attorney or the best attorney?
Right.
You always want the best attorney. And if you do that for all your vendors, you're doing your job. A lot of people waive it just because we don't need it. It costs too much money. They don't even ask what the cost is. Or a management company does that. No, your management company does not do it. Statutes put it in there for a reason because they've seen a lot of fraud, seen a lot of things, seen a misrepresentation. So I'm going to tell you the reason people don't do it, we don't want to spend the $3,000 to $5,000 for an audit. And like speeding, it works till you get caught and you go, I shouldn't have done it.
Well, and that's also, again, the reason why you would bring in someone like yourself, an expert, to come in and take a look at those finances, making sure that the budgets are done properly, the financial statements are done properly. And we can do that for you as the Condo Coaches, do a financial assessment of your community, let you know exactly where you stand. Do you find that that it's only like the bigger communities that typically have a CPA come and do them? Do you find anyone kind of doing it on their own, or does everyone typically try to have an accounting firm handle that for them?
I'm going to say my experience is case by case with management companies. Management companies, they usually have them all done or they have them all waived. I was associated with someone who had them all waived for many, many years. And 10 years ago, the property manager or the accountant there stole money from 8 of the associations and never had one audit done, never had anything done.
Wow.
Just got them to waive it. So if a management company's pushing you to waive it, that's when maybe the little red flag might come up. Hey, why do they want me to waive it?
Well, and that was going to be my follow-up question to that point is, and it seems like an obvious question, but again, do you entrust your property management association to handle that, or should you go to a third party and have an accounting firm come in and help you manage that?
It's all different opinions. You know what I mean? People have different opinions on different things.
I can give you a thought. Again, I'm pulling back from my previous 30 years of working out and everything companies. Our board members of these associations have a fiduciary responsibility, period, with capital P-E-R-I-O-D. The finances of that association are their responsibility, not the responsibility of the management company. To forego an audit to save $3, $4, $5, even $10,000 to put their fiduciary responsibility at risk is silly money to save. Silly money to save. So if a management company is telling you just go ahead and waive it, they're not on the hook from a fiduciary standpoint on the association, are they, Percy?
I'd be a legal issue.
Be illegal.
But the fiduciary is the board. The board is responsible.
Yeah, we can't say who would be on the hook, but I can tell you this for a fact. It's the board's fiduciary responsibility for the finances of the association.
Yes, sir.
So that's a fact. And I just, that's why we're so, if I feel passionate about it, I've been helping so many as a condo coach the last 6-8 weeks in this one arena. And I called Percy. I said, Percy, we got to get you back on, bud, because this, I think, if it's happened in this many cases for me, and there's 50,000 of them, I told him today, if I'm that lucky, let's go buy a lottery ticket.
Yeah. Well, and it goes back to even our insurance show, which, again, whether it was the property management firm or a CPA firm or whoever, if there are funds that were taken and now all of a sudden you're going to have to make up for those funds, those missing funds now, a homeowner could come back and sue the board of directors. And so, again, you would hope that they have the insurance policy on their board of directors.
I'm going to make one more. I'm going to go the good route, that there was no misappropriation of funds.
Okay.
And so when they don't understand it, to Percy's point, is if there's a big, we'll call it people not paying, but they're still carrying it as a income for that year, and they haven't looked at it all year long, and all of a sudden they think they're up 10 grand. And when they do that reserve, when the audit comes in, and in this particular case, it was this one particular association had a $500,000 prior period adjustment.
Oof.
You don't think that'll wake you up?
Wow. That's some rough news.
And it was footnote number J.
Wow. All right. We're talking financial statements and understanding your community's finances. Percy Legendre, CPA. He is our financial guest condo coach for today's show. Of course, head coach Dean Akers with us as always. If you want to participate, find us on Facebook, facebook.com/the Condo Coaches. Leave us a comment, question there. You can also head over to thecondocoaches.com where you'll get some premium downloads, and you can watch the show there on our YouTube channel. That's thecondocoaches.com.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
Blue is my favorite color. What's yours? What's yours? Red is my favorite color. What's
a swiller for this little feller.
And me, I'm keen on green. So what's your favorite color? Tell us, please.
Kids will spend 20 minutes listening to songs like
What's
this.
Your favorite color? Tell us, please. What's your favorite color? What's your favorite color? What's your favorite color? What's your favorite?
How about 2 minutes to brush their teeth? Brushing for 2 minutes now can save your child from severe tooth pain later. For fun 2-minute videos to watch while brushing, visit 2min2x.org. 2 minutes twice a day. They have the time. A message from the Partnership for Healthy Mouths, Healthy Lives, and the Ad Council.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Final segment, understanding your community's finances. Our topic for today, our guest coach, CPA Percy Legendre, our head coach, Dean Akers, with us as always. And we were getting into a pretty good conversation there about understanding your financial statements, because it is, I think, where a lot of the miscommunication happens and where a lot of the uncertainty happens. And just to touch on that and kind of close out that topic, Percy, where do you see people usually misinterpreting or not fully understanding their financial statements?
I think a lot of it is accrual basis accounting. It's more difficult than the cash basis. It takes some education. Like anything else, you have to learn it. And so that way you know what you're reading, know what you're looking at. A lot of people look at cash and go, oh, we're doing good. I could have $1 million in the bank, but if I owe $5 million, I'm not doing well. So they look at cash or equity and don't know how to read the statement. So they should go, they got some classes understanding financial statements where they go through different ones, show you what they mean and all that. And what you don't want to do is do the Enron method. Take the money and run.
Well, and again, if you are having issues with collecting fees, and you've got some delinquent residents out there, you can download our new premium download, which is collecting delinquent fees for your HOA or your COA. You can do that at thecondocoaches.com, thecondocoaches.com. It's a free download, and we wanted to get into now reporting requirements, because this is where you can get into a lot of trouble. I mean, you were talking about some amazing level of fines there, that people can get into a hole real quick if they are not meeting the requirements set by the state. Am I correct?
Yes, and your documents also.
Okay, so let's kind of run back to the first segment where you were talking about what are some of the things that have to be in the budget. You mentioned the dates have to be presented a certain way and have to be in terms of within a certain time frame.
Yeah, the beginning period of the budget and the ending period of the budget must be disclosed on the budget.
So January 1st, 2017 through December 31st, 2017, right?
Yes, sir. Bingo.
All right. Anything else on the budget front that is legally required to be there?
Oh, if there's a lot of things that are required to be in the budget. And really, they have Florida Administrative Code 61B. It's 61B20. It lists a good summary of 7 or 8 pages that show the requirements for budgeting, financial reporting, minutes, meetings, stuff like that. So Florida Administrative Code 61B20 is a very good resource. It actually lists the fines and penalties for each infraction. So that way you know what you're supposed to be doing.
All right, excellent. So we'll actually go ahead and grab that, and we'll also post it on our website and on our Facebook page for people to have that as a reference. That's excellent. And in terms of financial statements, are there legal requirements there as well? Are those handed over to the state for reporting?
The state doesn't get them unless there's actually issues that come involved. Like I said earlier, if you have 50 or more units and revenues of 150 to 300, you're required to do a compilation. A compilation is just take management statements and putting into a formal financial statement, balance sheet, income statement, cash flows, footnotes, and required supplementary information. A review is revenues between $300,000 and $500,000. In a review, you make inquiries. Did you reconcile your cash? Did you book all your payables? And you analytical procedures, compare this year to last year, this year to budget. The audit is when we go out and get third-party verification, look at the minutes, look at the invoices, check with the bank to make sure the balances are accurate, check with the legal counsel for any, outstanding litigation.
All right. And then, so let's get into, again, topic for the final segment. And today's overall topic has been understanding your community's finances. when it comes to those reporting requirements, timeline, right? What are we looking at timeline wise? Is it, is it tax day like everybody else? What's the time frame that the board of directors has to work within to be on the up and up legally?
Okay, if you read a statute, it gets really convoluted. You have to complete our contract for the completion of within 90 days. But once you receive the report, you have 21 days to get it out. So if I give it to you on January 31st, you have 20 or 21 days to get it out by statute, but no later than 120 days after year end.
Get it out to
the unit owners.
Okay, got it.
Or a statement that it's available upon written request.
21 days from the time you receive it to the time it needs to get out to the residents.
Yes, or no later than 120 days.
Okay.
Depending on when you get it. But also you have to look at your documents, because if your documents require something different, then you should go by your documents on that one.
Okay, so the governing document supersedes in that scenario.
Yes.
Okay. And what else? I mean, what are and I know there's a lot of documents that go into this, but what is required? What is it required to report?
You have to show the whole financial statement on an accrual basis. All CPAs got to follow GAAP, generally accepted accounting principles. It's got to be full accrual accounting. It's got to be fund accounting. So you're going to show what the cash balances are. You're going to show what the accounts receivable is, assessments receivable, how much people owe, with an allowance for what's not collectible. Lots of times that allowance number tells you how good or bad they are in collecting their fees. Insurance. Sometimes you pay insurance in November for the whole year, so you have some of that prepaid. So even though we spent $12,000, we only used $2,000, so we have an asset of unused insurance. Some people have fixed assets depending on what type of association they have. Then you have accounts payable. What do we owe? Things we owe at the end of the year that we didn't pay for. And then we have people who pay their dues in advance. They'll pay the January bill in December. Sometimes some associations spend that money in December. So there's no hole before they start. So
sure.
Then you show another detailed income and expenses. Income, investment earnings, cable fee income if you have cable fees you charge for, and then a detail of all your expenses, rent, management fees, maintenance, attorney fees, stuff like that, showing your income.
So give us what's the common thing that's left out that comes back to bite some of these boards when reporting to the state?
The things we see are not doing the proper report, are not doing a proper waiver. An HOA and condo can waive the reporting requirements, but you must do that minimum cash receipts, cash disbursements with required supplementary information. Condo can only waive it for 3 consecutive years. They must do it the 4th year. So more of the reporting requirements as opposed to, because the ones are done by CPAs, so most of them they look the same pretty much. It's the work behind it that people don't see sometimes. How long has your CPA been a member of the AICPA, the FICPA? Peer review is where people come and look at our records. Peer review is finally mandatory in Florida. It was not. We're one of the last states to do that in 2015.
And is that basically to set a baseline of standards or best practices?
Yes, pretty much.
Okay.
So even insurance, some CPA firms have malpractice insurance, some of them don't. So you need to know what you're getting involved in. It used to be, are you a member of the AICPA? Are you a member of CAI? Now it's, how long have you been a member of this? Because everybody just joined last week, you know what I mean? So to see who's been in the industry long enough.
And then part of that is the peer review.
Yes.
All right, excellent. And Dean, did you have something to add?
No.
All right. So, all in all, what's the typical time frame that it takes to kind of put all this together? I mean, again, we're talking about people who are volunteering to be board members on their board of directors for their communities association. Of course, you would hope that between the property management company or maybe the accounting firm that they are working with, that they're going to handle the bulk of that. But really, what's the workload entail, and how much time do they see them? Do they typically work on getting all this done right?
You hit on the key head. You're dealing with the management companies. There are a lot of management companies we deal with. CPAs, a lot of CPAs don't deal with some management companies because some people have cash basis records, cash in, cash out. To do an audit there would take forever because you're actually almost recreating the records, which is a conflict of interest independence. Most of the management companies know the CPAs who deal in this industry, and we got a system set up. In the old days, you used to have to go there and look at all the records. A lot of stuff's electronic now. So some things can take, a week or two. Some can take 2 or 3 months. It just depends. Some of them take 9 months, depending if it's a turnover audit from a developer that's been going on for 4 or 5 years.
Yeah.
Those can be a nightmare.
Well, and again, I think whether you're working with a property management company or you are working with a CPA or an accounting firm, if you want a second opinion, if you want somebody, a fresh set of eyes on your community's finances, the Condo Coaches would be more than happy to do that for you at no charge. All you got to do is go to thecondocoaches.com, reach out to us, let us know that you want somebody to come and do a financial assessment on your community. We'd be happy to send out an expert to go out and take a look at your finances and your budgets, and of course, making sure that you're also meeting these financial requirements.
Can I make one point too?
Of course.
I hear when I meet with boards in private, it's all about my management company isn't doing this, this, and this. Again, 100% of the time so far, I've been able to go through and say, what's your expectation? It's always vague, back to what you said. So now I'm helping boards put 10 points that they want their management company to do, including a quarterly financial overview, not just handed out at a meeting to go through.
But actually sit down and dissect it.
Yeah, and really talk about it and just things like that. So you're not in the dark.
Yeah.
And if your management company says, well, we don't do that, then they can call us as a condo coach. But quite frankly, I'd be a little disappointed.
Yeah. Well, and again, we can't tell you how incredibly proud we are of our premium downloads, but trust me when I tell you that you absolutely want to go and download these right now. We have 2 of them. One of them, the top 10 things you need to know if you're a board member on a COA or an HOA. The other, of course, is collecting delinquent fees for your COA or HOA. Download those right now at thecondocoaches.com. Again, follow us on Facebook, YouTube, The Condo Coaches. Subscribe to us on iTunes. See you later.
You've been listening to The Condo Coaches, brought to you by lmfunding.com. Find us online at thecondocoaches.com and join us this same time next week as we help you navigate life in your managed community.